recently in their 4311 reported over 1 billion ounces of silver equivalent.
Depending on how quickly we get the 3 drills in. Every hole that we drilled was mineralized, potential 40, 50-year mine life. This is a totally different animal.
Everybody, welcome back. My next guest is Tom Larsen. He's the CEO of Eloro Resources Limited, trades on the Toronto Stock Exchange under the symbol ELO and trades in the United States under the symbol ELRRF. Tom, welcome.
Thank you. Really great to be on the show.
You bet, Tom. So let's start off with just an overview description of the project Iska Iska in Bolivia.
Our main focus is that of the Iska Iska project, a 9.5 square kilometer volcanic edifice project in southern Bolivia on the Tin Belt, about 50 kilometers from the Argentinian-Bolivian border. This is what they deem a polymetallic, multi-metal type of complex, dominant metals being silver and tin, along with indium, lead, zinc, and a few other more rare earth type metals. But the main flow of this is the silver-tin component.
Sure. Okay, so most importantly to investors is the change in the political weather that has occurred in Bolivia recently, with the election of a new president who is definitely market-friendly, center-right. Tell us about the new president and what that means for mining in Bolivia.
Yeah, his name is Jorge Paz Pereira. He's a center-right from a center-right party. The National Party based out of actually his area is in southern Bolivia, close by to where we're located. He's in a place called Tarija, where he was a senator prior to the election. The great thing about this is that the mass party that were led by a fellow called Evo Morales from 2006 when they went into power, more of a left-wing socialist type government, controlled the Congress, total majority, and that's where we saw stagnation slowly but surely develop under this regime, a typical Latin American left-wing regime that could never really enhance, or did they really want to enhance that foreign investment. With this new government, with the new electric along with another competitive party, also right-wing, under Tutu Carrera, those two control 98%, 97% of the overall vote of Congress. The Mass Party are down to 3%. There were two elections, basically a primary back in August, where the Mass Party lost just any representation whatsoever in Congress, and their charter was almost pulled with them down at 3% of the vote. So they're long gone at this stage, and you have two right-wing, center to right-wing groups, basically Paz, who has, I believe it's around 52, 53%, and Huero, which is, I believe he's, just down at that 40, 42%. So very, very positive. You're going to see things like the reopening of the U.S. ambassador's office that was basically closed down in 2006 with Evo Morales. You're going to see world arbitration courts recognized on decision-making that was also shut down when Evo Morales came into being in 2006. These are the types of milestones, short-term milestones that will take place and will really drive that foreign investment that's needed. Already, the president, we call him Paz nickname, has been to the U.S. He's had representation at least to Washington in the last few days. They're looking for, I believe, a $5 billion U.S. loan, which has been approved not only by the IMF and also by the U.S. That'll shore up U.S. dollars that are badly needed right now into the country, and also fuel shortages that the former Congress run by Mass wouldn't pass funds for to bring in, imports to bring in to move things along. That affected us, for instance. We were down to one drill because of the lack of diesel. That's a total turnaround now as of, with the outcome of this election.
Yeah. So even 3 days ago, Secretary of State Marco Rubio met with President Pereira and expressed outright support for transitioning Bolivia's economy into a much more robust version of what it was, because the U.S. is very interested in a lot of the metals that are in Bolivia. Is that right?
That's totally right. They're also very, they're backing Argentina continually. There were foreign loans from the U.S. to make sure, that Milu was reelected in the interims, midterms, and he was. The U.S., the South America, obviously, we're closer to their home, to North America. And, metals such as tin, especially in our case, the glue of metals, it's an essential metal that, for instance, the U.S. have no domestic source whatsoever. And they use over 50,000 tons of tin a year annually. Most of that tin is sourced out of Myanmar, Indonesia, China, and the politics that have been developing from those areas. So supplies are sensitive, and now that the U.S. they're familiar with the Bolivian tin belt, but now with the acceptance of a much more friendly Western friendly government in place, I think that can really help projects, especially ours. I mean, I believe that we will be the largest open pit tin operation in the world. We've got the jump. I'm not saying there aren't other tin type operations that could be run with multiple metals along that tin belt, but I'm sure they're there. But we are 4 or 5 years ahead of the game. We went in 2020 when things, from an asset standpoint, from a metal discovery standpoint, looked incredibly attractive. But from a political and financial standpoint, it was tough, but we took the risk.
Sure. So that deposit, you recently published a resource calculation that was essentially updated definition drilling. You put $60 million into the property over the last 3 years, and you now have a resource of 298 million ounces of silver, 4.9 million tons of zinc, and 1.74 million tons of lead. Now, you've got a new PEA coming out shortly, if I'm not mistaken, that's going to even improve on those numbers.
Well, I think what we took a look at was, because this project, we came in September of 2020 on the inaugural drilling campaign, actually from a rehabbed adit about 200 meters from surface. Everything down to that adit was oxidized, leached out metals. That's why you never saw a lot of artisanal mining in this area, unlike the great Cerro Rico, 180 kilometers due north, where there were exposed silver, zinc type veins that were discovered back in the 16th century, 17th century. Largest silver endowment in the world, over 2.5 billion ounces of silver produced, another volcanic type structure. This is the type of characteristic that you see in Bolivian bonanza style multi-metal porphyry fed, tin porphyry in our case, fed environments. And for us to go in and start drilling, and when every hole that we drilled was mineralized. I'm not saying every hole was highly commercial, but every single hole was mineralized, 400 or 500 meter holes. And this is what really brought in attraction, the attractiveness of this project. And the share cap took off, the old Larsen curve, discovery stage, first stage. What we came up with, and in hindsight, I wouldn't have brought out an MRE. In hindsight, the way the market's always looking at MREs and PEAs and what's next, I would have kept drilling. If I had my way, we would have just kept drilling until we had a really strong sense of where some of the higher grade material within this complex could be outlined. And that's what we've been doing since we brought out the MRE in August of 2023. We've spent probably completed another 30, 40,000 meters of drilling. But this is more on what we call infilling 50 meter rather than 100, 150 meter spacings in the upper part of this collapsed resurge center of the volcano, the caldera, where there's a strike length of close to 1,700 meters across, where, we did report on a 1-to-1 strip ratio. The grades were only about 24, 25 gram silver at the time, with $22 silver prices. We didn't include tin whatsoever in that first MRE. It was mainly a silver zinc driven MRE valuation. Since then, we've discovered tin corridors to the west also that will be in the open pit model. It'll be a 15-year mine life. And the point is that, especially with the new government in place, we want to bring in at least 3 drills, HQ, PQ, and resume another 10, 20,000 more meters minimally of drilling to really upgrade that resource to the point that there's a very, very solid PEA that we can present. All the operating costs, all of the processing studies, all of the innovation with TOMRA ore sorting, that's all been completed and looks very, very, it's a strong operating side, component to what you'll see from a profit margin standpoint per ton of material.
Sure. So you most recently in your 43-1-1 reported over 1 billion ounces of silver equivalent. And so this new PEA is going to significantly increase that?
No, that was based on just these 500 meter holes, intercepts, trying to outline the actual size of this system within the 9.5 square kilometers. What we did was outline around 600 million tons within that volcanic center and deep towards the tin porphyry area, the feeder. That's what was outlined from these 150 meter spacings. But that's why you're only getting, 13, 14, 15 grams silver overall. This was a first pass. So what we're dealing with, we're not infilling all the way down throughout that envelope of 600 million tons. That can be done at a later date, much later date, to show a potential 40, 50-year mine life. We are infilling the upper part where we are averaging initially around 25 grams silver. We want that up to at least 35, 45 grams silver. And we're very pleased with the drilling to date, along with a tin component with minimally 0.2, 0.3%, which translates into a $70 to $100 valuation per ton. Recoveries on tin are lower than what you do see with zinc, silver, or with lead, silver. So you really want to see at least a 0.3% cutoff. You want to net out at least a $40, $50 profit margin per ton on this. And this is how we look at this. My background in the last 15, 20 years was that of a company called Champion Minerals, which I founded in 2006. This is an iron ore project, a company today that trades on the TSX under the symbol CIA. And it's bulk tonnage movement of iron concentrates. And that's what really attracted me to the scale of this particular project, being bulk tonnage, 30, 40,000 ton a day operation. So you're looking at value per ton rather than, I've got a really high grade silver vein here, high grade gold. This is a totally different animal. Very similar to the San Cristobal operation, 180 kilometers due west of us, the former Sumitomo 50,000 ton a day bulk sampling open pit deposit that made a lot of money for Sumitomo from 2006 to present day, now run by a fellow called Dr. Quinton Hennig, who is an advisor, senior advisor to us. We've signed an NDA with San Cristobal, over the last 18 months ago, 15 months ago. So we understand it's a private concern. We certainly understand the operating inputs as to what we are looking at in our own model for the PEA. So, covering all the bases, James.
Mm-hmm. Okay, so when can we expect this PEA?
Well, you're going to see resource updates first.
Okay.
Now, change of government, you're going to see, us being able now to, access at least 3-4 drills to get back in. I was going to bring out a PEA sort of the first quarter in 2026, but we know some of these high grade tin and silver areas that we want to do even more infill drilling, which will only enhance that initial PEA. So look forward to be, probably a second quarter, depending on how quickly we get the 3 drills in. But no, the resource upgrade is what drives the PEA.
Sure.
I'm staying with that.
Okay. That sounds great, Tom. All right. This is our first conversation. I'm sure we're going to have many more. I appreciate your time today. We'll come back to you soon.
Thank you so much for having me.
You bet. Bye for now.